Hello and welcome to our 12-part mini-series Harvestable. Join us every Thursday for 15-minute fireside chats with agriculture's most insightful minds in the lead up to harvest. In this episode, we are joined by Alex Low of Chester Commodities.
Hi there, so Ben Reid here, co-founder and head of growth at AgriDigital, and today I've got on the line Alex Low from Chester Commodities. How are you, Alex?
Yeah, well, thanks, Ben. How are you getting on?
Yeah, really well, thanks. Really well. So I guess Chester Commodities are a software customer of ours based out of Orange, and we'll get into talking to Alex in a moment about Chester Commodities and the theme of today's talking a bit about international markets and why prices are where they're at today and potentially where they're headed and why. But before we get into that, Alex, we might just quickly give you an opportunity to introduce yourself. Tell us a bit about where you grew up, what your background, what got you to where you are today, and then be interested to talk a bit about your startup business and with your business partner. So I might hand over to you to tell us a bit about yourself.
Yeah, right. Grew up on a sheep and wheat farm in the Central West at West Wylam. Probably got a grounding and introduction to agriculture. Growing up on the farm, doing a few things around harvest time and sowing, and kind of got into into having some interest in that. Built off that upbringing, and went on to obviously get through high school, and then at university decided I want to get into the agriculture sector. So studied ag economics at Sydney Uni, which was good fun. And then from there, I managed to get a job for an agricultural fund called Duxton. They were formerly a Deutsche Bank. I think it started off called Galloff, and then they got spun out into private equity called Duxton. So that was based up in Singapore. And I did that for a couple of years, which was really good. Got to see some pretty cool parts of the world where they had assets or were looking to acquire assets. So that was a really interesting time. But then I kind of decided I wanted to get into markets from that point, and an opportunity came up back in Australia with MF Global, which lasted all of about 5 weeks before it went into receivership. So that was a good move on my behalf. And then from there, I just got into. I was obviously on the desk with a couple of other guys at MF, and an opportunity came up to go to a fund trading futures, ag futures, based out of Sydney. So we went over and did that for a while, and probably traded futures for 6 years, which is good. Learned a lot. Got to travel a bit with that as well. So going over to the Midwest was really good, opening up to see that part of the world and just realise how big the grain markets are in the US was a real eye-opener. And then from there, we probably finished up in finished up about 5 years ago trading futures, and then went to another fund who were doing a physical grain desk, or starting one. And I came on to start that with a couple of other guys at Vivcorp Commodities. And that's where I got into actually doing what we mainly are focused on today, which is trading containers up into Asia across a number of different commodities. And probably about 3 years ago, we went through some pretty horrific droughts, and essentially they offered Richard and I, who I started Chester Commodities with, Richard Black, he was working with me at Vivcorp. They essentially offered us the business to take it out on our own. Just from a number of aspects, they saw some pretty big opportunities in some other fund, or they wanted to deploy their capital into other areas. And obviously the grain markets weren't offering too much of an opportunity at that point in Australia, given that such small crops and the prolonged drought. So that's how Chester started. So we took it out, we rebranded it, and essentially got some seed capital of our own. And then we're fortunate enough to secure some bank funding not long after. And we've kind of grown it from there.
Well, that's a great background, I guess, Alex, in a short time frame. I'm sure a lot of stories we could unpack there a little bit further, but I guess hopefully for those listening, gives everyone a perspective on your background, I guess, in particular, and I guess the experience that you have, and I guess what you absolutely need when you're trading, physical commodities and the delicate nature of it all, and the intricate components that make it all make it all happen, which I guess particularly a lot of farmers, don't necessarily get exposure to. The majority of them don't, at least, and it's great to be able to have you here today to talk a bit through that. And I guess from experience, starting a business from scratch is a pretty daunting thing, and going into partnership with the right people is obviously critical. So it's great that you and Richard have been able to do that, and it's been a wonderful thing for us to be have you as a software customer using our AgriDigital software to kick that business off. So I guess just probably back to the theme of the conversation today, talking about markets. At the moment we're in fairly unprecedented times here in Australia, where we've got a combination of what looks like, fingers crossed, good yields across both the west and the east coast, and coupled with historically high prices, and I guess the high the yields look good, and for obvious reasons we've had great conditions this year and last year, but I guess looking at markets and prices are very strong, and wouldn't mind just sort of getting your global perspective on that, Alex, in terms of why prices are where they are, and then just trying to understand that a bit better.
Yeah, well, it's certainly been pretty interesting times in the global grain markets. There's probably a number of factors that have helped push it up high, which is great news for the farmers, and obviously from a trading perspective, we're lucky down here that we've got such volumes over the last year, and potentially the size of the crop coming this year. It's certainly a good environment for everyone. I think obviously the Northern Hemisphere crops were probably a bit underwhelming, especially in corns and beans. And we've seen those balance sheets tighten right up going into next harvest over there. And then I guess the Black Sea as well, like it obviously had its issues and it's tightened up there. And then I just think we've seen the macro view come in for commodities in general. Like we would have, most people would have seen the price action in iron ore, which is, gold, and to name a few others. I think it's just a combination of all those factors. And yeah, we've certainly pushed the price up here a lot higher than many people probably would have anticipated, given the size of the crop last year, and especially seeing it roll on so much further. And I think from our perspective, what we've seen is we thought our volumes would definitely drop off, I guess, in the second half of the calendar year this year, but it really hasn't. It sort of it looked like it was going to be a bit of a lull, but it's fired back up again and pushed a lot of demand back to Australia, which I think is a clear indication that it's pretty tight out there for wheat, especially, and we're still really competitive.
It's interesting, and I guess the COVID story, I guess, has probably had some impact on that, but I guess it's really, as you say, driving back to more the tightening of the supply globally, and naturally the Southern Hemisphere crop harvest about to happen on wheat here in Australia, and barley, and obviously oilseeds with canola, and the Northern Hemisphere bean and corn crops being harvested now too, but obviously their drier season over there has had an impact as well. But has COVID had any impact on markets, Alex, or has that been sort of not really? There may have been some small amounts of volatility, but has it been really just more of the, as you say, the macro view?
Yeah, I think COVID's definitely had an impact on markets. I think probably the biggest impact we've seen is definitely around the logistics side of things and what that means for the market in terms of pricing. So when we're like pricing grain at the moment, we have to factor in a higher margin, just because there's so much more risk associated with logistics at the moment. Everyone's probably seen in the newspapers the container shortage issues, coupled with it's probably not so much a COVID issue, but the port issues around the industrial action. It's really sort of amplified the risk of getting goods executed and away in a timely manner. I think the hard thing for COVID has been, from a pitching containers into an Asia perspective, is that it's just so hard to get a firm grip on where rates are going to be, what your allocation you're going to be able to get, how secure those allocations are. I mean, this week, I could rattle off 5 different scenarios over the last 12 months where a shipping line rings up and cancels, a lot of freight on you, and then it's a mad scramble to try and get it back on track, to get it shipped. There's just so much demand for containers coming out of China, back into Europe, into the US. A lot of 20-footers used to get brought to Australia empty to take advantage or try and take advantage of the grain season. And we're not seeing that at the moment because it's, the inbound demand for goods in Australia is still really high. So there's no point bringing empty containers down here. They're just bringing full 40 footers, not so much 20 footers, which just puts such a big constraint on the amount of 20 footers you can get access to export grain. So I guess the COVID, it's definitely had an impact, but probably more so, I would say, on a logistics front, which indirectly affects the pricing of commodities going out of Australia.
Yep, that's really interesting, Alex. So what you're saying there is the majority of grain in containers out of Australia goes into 20-foot containers, not in 40-foot containers. But so there's a tightening of supply of 20-foot containers, which naturally means you've got a higher price for the cost of that to go back. Yeah,
exactly. So there's I think it's roughly about 80% of the containers coming in are 40 footers typically. So there's really limited supply of 20s. So in a bigger year, such as the one we've just had and the one coming up, it puts a lot of pressure on your ability to ship goods in a timely manner. And then there's also things like COVID will, some of the ports will have some infection around the world, like China will shut down ports just to try and get COVID under control, and that just has a knock-on effect everywhere. It wasn't COVID, but everyone probably saw the Suez Canal. Container ship blocked the canal for all those weeks. I mean, that somehow managed us to get, I think we had about 300 containers cancelled because of that, because they couldn't get containers back to Europe quick enough or back to China quick enough to meet the high demand there. So they decided just to take our containers away and to take them back up to China empty 20 footers just to try and capture higher rates out of China than worrying about having them out in Australia for 15 days, getting packed back to port, and then back up to their customer. We're backed up to our customer and then back in and available to capture those markets out of China. So it's probably they're the main sort of factors we're seeing around the container issues.
And probably just for perspective for everyone, let's just talk in Australian dollars per tonne. What's the cost of getting grain to somewhere in Southeast Asia in a container, 20-foot container today versus what it was, say, 6 or 12 months ago?
It's probably gone up. Some of the rates coming out for Q4 are really big, but I'd definitely say it's gone up 80 to 100%. Yeah.
Wow. Yeah. Yeah. So really, it's amazing to think where grain prices would be here, back to the Australian farmer, if those prices were where they were 12 months ago. I mean, although we've got high prices here in Australia, we would be seeing significantly higher prices again if those freight markets weren't high like they are.
Yeah, exactly. I mean, obviously, the majority of grain still goes out via bulk out of Australia, but those rates have climbed a lot as well. So, it's probably only a $5 difference between bulk and container rates to most major ports. So it's the bulk rates driving it as well.
Yep, interesting. And what percentage would go out in containers versus in bulk out of Australia?
I don't know exactly, but I'm guessing somewhere between 80 to 90% would still go out in bulk.
In bulk, yeah. Yep. Yeah, interesting. Okay, that's good. And probably one thing you touched on there before we wrap up, but one thing you did touch on was sort of the capital, I suppose, and naturally higher prices here in Australia now. And a large crop. We've got huge demand on funding, I guess, the crop. I guess if the Australian farmer, sells the grain at harvest time or thereafter, there's obviously a huge funding demand for the buyers to access that capital. And I guess for a business like yours, Alex, you're not yet the size of Cargill. The demand on the capital is going to be really, really hard as well. So do you have a sense that will have an impact on prices at harvest time? And I guess without getting too technical, talking about basis, but do you think that'll have an impact on the domestic basis here in Australia and the prices as harvest progresses?
Yeah, definitely. I mean, it's hard to see. Like, we've got such a big crop. The basis is relatively cheap, but it's still hard to see a scenario where we don't see some form of harvest pressure, I guess, just simply because, like, who's going to be there to buy it, or when the stem can only handle so much, and obviously containers is a small part of it, but there's only so much outward traffic that's there available. So you might see the funds step in and put big basis positions on and own it, But yeah, I mean, we are at really big prices. So from a trader's perspective, I guess I'm really going to be interested to see how the farmer behaves at harvest in terms of, it's such a big port price historically. Are they going to try and let a lot go, which one would naturally think they probably do? And then maybe the pool operators get a few tons to try and have a crack at that basis position and see how that unfolds during the year.
Yep. Well, like always, the crystal ball, be nice to have one. And but yeah, really appreciate your insights there today, Alex. Nice to have someone who's close to particularly that export side of things, and given a global perspective on markets. But we could talk all day, but we will wrap it up there. But yeah, thanks again, Alex Lowe from Chester Commodities, and really appreciate your time today, and best of luck for the coming harvest.
Yeah, thanks very much, and good luck to everyone with the crops this year.
Thank you for listening to Harvestable by Waypath. We hope you enjoyed this fireside chat. Have a great weekend and see you next Thursday.